got the mainland markets have done extremely well. You've got the Hong Kong market, which has passed the 30,000 mark once again. Wherever you look around the world, there are some very buoyant markets. So it's very tempting as an investor or even as a trader sort of to pile on to what has been working. It takes a little bit more courage to try and get out there and pile into what has not been working. Where are you seeing runway and value in the markets at the moment?
That's a great question, Mandy. And what we've actually seen is that after 3 or 4 years of secular growth companies embodied by technology firms really being the most dominant forces in the markets, that there's been a shift in sector leadership over the last 3 or 4 months. And that's really principally been driven by what we at AB call the collapse of uncertainty. I think the availability of a vaccine or multiple vaccines to bring the coronavirus episode to a successful conclusion will basically mean that this year we will see around the world growth that we haven't seen in terms of growth rates for almost 20 years. And so that is actually a very positive factor for the markets, and that is generating a certain amount of what we call FOMO that is attracting a lot of investor attention on cyclicals and on laggards that have really not performed well up until the last few months. While we still think that there is still some room for value names to do well, we would just point out that at a certain point, we do think that investors may start to mistake the recovery growth rate for a more permanent condition. And we would just warn against that and have people ask themselves, what is really sustainable in terms of growth rate, not just for the rest of this year, but for 2022 and beyond. And when we look at some of those types of issues, we think that investors need to be really concerned about 2 things. One is the level of earnings growth delivery and the visibility of that. And the other is the potential for rising bond yields to affect valuations. And we really are recommending for clients that they find a way in between these 2 twin risks that really face us on either side of the spectrum.